Hi class, now we look at depreciation concept. We got two bases in computing depreciations. As you see here, we got monthly basis and we got yearly basis. Under the monthly basis, if we purchase the asset in the date of 1st until 15th of the month, then the depreciation is full month calculated. If we purchase the asset in the date of 16th until 31st of the month, then the depreciation is not calculated. When we talk about sales, actually the sales is referred to when we dispose the assets. When we dispose the asset in the date of 1st until 15th of the month, then the depreciation is not calculated. If we dispose the assets between 16th until 31st of the month, then the depreciation is full month calculated. Okay, so this is the monthly basis for depreciations. Now look at the yearly basis depreciations. If we purchase the asset at the year, that means we got the depreciation is full year depreciations. Okay, if we dispose our assets at the year, so there is no depreciations counted. Just a remark here, if in PSPM, the question didn't talk about whether it is monthly basis or yearly basis, then we assume that we use monthly basis. We have two methods of depreciations. The first one is straight line method. Then the second one is reducing balance method. Now look at the first method, a straight line method. Straight line method means the company will allocate an equal amount of depreciations to each year. And the formula for the yearly basis is cost minus residual value over useful life. Residual value also can known as scrap value or salvage value. Okay, the cost here, it actually refer to all expenses necessary to acquire the asset and make it ready for intended use. And the residual value refer to the estimate of the value at the end of its useful life, that is salvage value. And the useful life here is the estimate of the expected life for the asset. Okay, this is the first formula, or we can use the second formula. This is the alternative, the percentage time cost minus scrap value. Look at the example given here. If the machine cost is 12,500 and the useful life for the machine is 5 years, the scrap value is 500, so you use the formula to calculate for the depreciations. So the cost of machine is 12,500 minus scrap value 500 over useful life 5 year, and you will get 2,400 per year for the depreciations. Okay. By using straight line method, we will see how to calculate the depreciation expense, accumulated depreciations, and net book value. Net book value is cost asset minus accumulated depreciations. Well, see how. Let's say in the 1st January 2019 until 31st December 2019, as you calculated before, the depreciation expense is 2,400 per year. So the accumulated depreciations for first year is 2,004, and the net book value is the cost of asset 12,500 minus accumulated depreciations 2004, we got 10,100 for the net book value for first year. Okay, now look at the second year. So same thing, depreciation expense will be 2004, every year the same. Okay, so for accumulated depreciations, 2004 plus 2004 here, we got 4,008. Then net book value for second year is 12,500 minus 4,008, we got 7,700. Same thing happened, same method, same way for the third year. And the depreciation expense still 2004 accumulated will be 4,008 plus 2004, we got 7,002. And for the net book value is 5,300. Why? Because 12,500 minus 7,200, we got this amount. Okay, for the year of 4, same depreciations expense is still 2004, and the accumulated depreciation will be 9,006, and net book value will be 2009. For the last year, for the year of 5, depreciation expense 2004, accumulated depreciations 12,000, and the net book value will be left 500 because 12,500 minus 12,000. Okay, remember here, this 500 net book value ini mesti sama dengan nilai scrap ya. We need to make sure the final value of net book value equal to the scrap value. This is because we have deduct the 500 at the very first stage in the year 1 in the formula of depreciation calculations. Look at the account for depreciation expense. For the first year, we will debit accumulated depreciations for 2004, then we credit profit and loss statements for 2004. Okay, this is at the end of the accounting period for the first year. So then after that, for the accumulated depreciations for machines, we will credit depreciations 2004, then we got the balance carried down for 2004. So how do we journal it? For the first year, 31st December 2019, we will debit depreciation expense 2004 and credit accumulated depreciation machines 2004. For the second year, okay, now second year, 31st December 2020, we will debit 2004 under the account name of accumulated depreciations. Same thing, we will credit profit and loss statement for 2004. Then here, okay, we got the balance brought down from the previous year. Here, balance brought down for the first year, bring here 2004, and for the current year 2020, we got depreciations 2004, so all together is 4,008. So 4,008 will be the balance carried down for 2008. Well, okay, so the second year journal is still the same. Debit depreciation expense 2004 and credit accumulated depreciation for machines 2004. Then we look at the third year, same thing. We will debit accumulated depreciations for 2004 under the depreciation expense account. Then we credit profit and loss statement 2004. Then look at the accumulated depreciations for machines T account. And this is the balance carried down for the previous year. We bring here 2004. Then for the current year, 2021, depreciation expense 2004. So add together, all together is 7,002. So the balance carried down is 7,002. So same thing for the third year. The journal will be debit depreciation expense 2004 and credit accumulated depreciations for machine 2004. Now we will see how do we record the depreciations inside the financial position statement as at 31st December 2019. This is the first year. So you will see here under the current asset, we got machines 12,500 and minus accumulated depreciations for machines 2004. Then we got the net book value 10,100. Okay, I skipped the second year. I straight away go to the financial position statement for the third year as at 31st December 2021. So same thing, under non-current asset, we got the machine with the machine price 12,500 minus accumulated depreciation for machines 7,200. So we got the net book value for 5,300. Look at another example for purchase machine with 3 years useful life with the straight line method. Okay, now look at the yearly basis. Yearly basis also known as annual basis. For example, if we buy the machine on 1st May on 2019, so we do have a depreciation expense for 2019, that is 2004. For 2020, same thing, we do have depreciation expense for 2004, but for the year of for the third year, and we dispose the machines on 30 November on 2021, so we got no depreciations expense for the third year. Why? Okay, look at the explanation here. A, okay, for the purchase, if purchase done on 1st May 2019, we consider the depreciation value as 2004, although we bought it on 1st May 2019 until 31st December 2019. The depreciation is 2004 on the year of 2019. When disposed the assets of machines, as the company sell the machine on 31st 11 2021 and it is not reaching a useful life for a year or 1 year on 2021, so no depreciations on the year of 2021. So total depreciation is 2004 plus 2004 equal to 4,008. Remember, depreciations on the year 2021 is 0. Let us understand depreciations by monthly basis. Let's say we purchase assets on 1st April 2019. So for the first year, 1st April of 2019 until 31st December 2019 is only 9 months. Why? Because April full month calculated. Okay, so April until December is 9 months. So the depreciation is 9 over 12 times 2004 and we got 1,008. For the second year, 1st January 2020 until 31st December 2019. This is 12 months. So we got the depreciations of 2004. Well, let's say we dispose the asset on 30 September 2021. So for the year of third, so 1st January until 1st January 2021 until 30 September 2021. Here, the September is full month calculated for this depreciations. So we got 9 months here. So you times 9 months times 2004, we got 1008. So accumulated depreciations is 1008 plus 2004 plus 1008. Total is 6000. Let's say now you purchase on 16 April. So for the first year, 16 April until 31st December for 2019. April is not calculated for the depreciation expense. Okay, so we got only 8 months, so 8 over 12 times 2004, and you got 1600. Okay, for the second year, of course, the full year, and you got 2004 and 2004 for the second year. Then for the third year, let's say you dispose the asset on 1st September 2021 at the third year. So now 1st January 2021 until 1st September 2021. September is not calculated for the depreciation expense. So we only have 8 months for the year. So 8 over 12 times 2004, and you got 1006. So the accumulated depreciations is 1600 plus 2400 plus 1600, and you got 5600. All the depreciation expense is based on this basis in computing depreciations. Look at example 2 by straight line method. The machine was purchased on 1st January 2013. The asset cost was 130,000. Salvage value is 10,000. And useful life of the asset is 10 years. Calculate the depreciation expense on 31st December. So question A, if the same asset was purchased on 25th January, A, calculate depreciation expense on 31st December by annual basis. B, calculate depreciation expense on 31st December by monthly basis. So now we calculate the value of depreciations by using the formula cost minus scrap value over useful life. So 130,000 minus 10,000 over 10 years, we got 12,000 per year. Therefore, for the question A, we got depreciation value for 12,000, and that is for the yearly basis. For question B, due to the asset is bought on 25th January, so the whole year actually we only calculated for 11 months. So 11 over 12 times 12,000, we got 11,000, and this is for the depreciation value based on monthly basis.